Hello and welcome to today's Your Daily Five. I'm Tom Bowley, Chief Market Strategist at earningsbeats.com, and I'm excited to join you on this Friday, April 16th. Hard to believe, already mid-April. Um, Before we get started, I want to invite all of you to join me on Saturday, April 17th at 2 p.m. Eastern Time for a free webinar. At our website, when you come in, we will have something up which will provide you access to a room. But it'll be a sneak preview of quarter 1 earnings season. So I'll discuss a few stocks that have already reported earnings this quarter, kind of going through, looking at them technically, give you some of my favorite reports so far. And then I'll also be looking for stocks that could make a very strong pre-earnings advance. And I did this in one of the recent Chart Watchers articles, where it was one of the market's biggest mysteries solved, essentially just talking about how the market tends to have these pre-earnings run-ups. And so if you find the right stocks, you can really get some big moves. So one stock I had pointed out was Shopify, and Shopify has gone up 20% just in the last 2 weeks, because it does have a history of performing well heading into its earnings. Also, after I gave that, I invited everyone to join my Earnings Beats Digest newsletter. It's a free newsletter. And I was going to give another stock out that I was looking to have a really solid pre-earnings run out. That's run up, I should say. And that stock was Tesla. And Tesla also is up about 20%. So I think you'll find some really good information. And just wanted to point out, love to have you join. And again, that'll be Saturday, April 17th at 2 p.m. Eastern. Love to have you join me. All right. I thought for today, what I would do is I wanted to give you 5 stocks. These are 5 software stocks that I think could have nice run-ups into earnings. So this will be, I guess, a sneak preview of tomorrow's sneak preview, if you will. So I think, when you look at these 5 stocks, these were 5 stocks that have done pretty well in the past, but have gone through a period of consolidation. But I wouldn't be surprised to see them make a run heading toward their earnings. And all of them report earnings. I can give you the dates between May 6th and May 11th. So we're talking about anywhere from 3 to 4 weeks from now. They'll be reporting earnings. And I think that we could be seeing some nice moves heading into these earnings reports. I expect software companies to report very strong earnings this quarter. So the first one I have here for you is Cerence, CRNC. And the way I like to review these charts, I'm going to pull up a relative chart because I like to look at how they're doing. First of all, their accumulation distribution, obviously their price action. But then I also like to see how these stocks are performing and had been performing relative to their peers. And if you look, many of these stocks were leading their peers at the time they set their highs. And now that they've been consolidating, they've lost some relative strength. So kind of fallen off the radar of some folks, trading, I think. Many software stocks, not just the ones I'm going to show you. But anyway, when I look at Cerence Corp, I see a stock now that's put in this double bottom, has gone up, tested the 20-day, looks like it wants to get through here, the 20-day, which is very encouraging. And look at that AD line. This is a little bit of a tell for me as well. When I see a stock going down, but its AD line stays right up near its recent high, that just tells me that, the stock's doing okay in the afternoons. That's how you keep your AD line up. It's where you close in it during a particular day relative to your trading range for that day. So if your AD line stays up, chances are you've been having some pretty decent closes where you remain, you're not closing on lows continuously. And that's, to me, that would be a sign of distribution. But this is more a sign of accumulation. So I think we're going to see some runs in these software stocks. So the first one I wanted to give you was Cerence, CRNC. You can see the software group just broke out. And now you've got Cerence just starting to turn back up potentially versus its peers. So keep an eye on this one. The second one I wanted to give you is not the Dow Jones. Oh, hold on a second. Let me get back here. All right, so Cerence was the first one. The next one I wanted to give you is Rapid 7, RPD. Once again, look at the AD line. Even though we had this move down and we haven't gotten back up to the recent highs, the AD line's ready to break out. So we're starting to see this one just begin to turn up again. And it's not unusual to see these stocks consolidate and lose relative strength. But then as they get toward earnings, they can start pulling, shooting back up again and beginning to show relative strength. So this may just be the start of it. And I like the fact that we've gotten back through both moving averages and also RPD trying to make this break with its 20-day above the 50. That's a golden cross. Anytime you get a short-term moving average crossing above your longer term, that normally is a pretty good sign. So any kind of a pullback on these stocks, once they get through their 20-day, I would be looking for their 20-day to hold. But don't be shocked if Rapid 7 makes a pre-earnings run. The third stock I want to give you is AVLR. This is Avalara. Avalara may already have started a bit of a pre-earnings run, but it's struggling right now at the 50-day moving average. And if you look back, you'll see prior tops and also prior bottoms right in this 140 to 150 area. And notice where our last failure was, 150. And we're sitting at 149.27 right now on the chart. So let's see if we get that breakout or if we get a pullback. Pullback to the 20-day, I think, would be a really solid reward to risk entry. And then, of course, what you're looking for is that break back out above 150. But Avalara, just like the other two I've shown you, maybe even better here because we've gotten an AD line breakout. So even though price action had come down from 180 to 120, the AD line stayed up. And this was one of the big keys and one of the reasons I was very bullish last March and April during the beginning of the pandemic, while a lot of folks were calling for this, said the sky was falling. I stayed pretty bullish. And one of the big reasons was I saw these AD lines on a lot of the tech stocks that continued moving higher, even though prices were falling. And so I think that's a pretty good indication that maybe there's not as much distribution taking place as you might think looking at the chart. All right, fourth stock I have for you is Datadog, DDOG. So Datadog moving up through its 20, went through its 50 barely, kind of like Avalara. You can see a little overhead resistance. We had support previously, 90 to 95. Here was a top at 90. Here was your top at 95. Next breakout, I think, will be really bullish. And look at Datadog's AD line. So again, seeing sell-off in price action, but not really getting confirmation that the stock's being heavily distributed. So I think Datadog here looks pretty good. And the last one I'll give you for your daily five will be Net, which is Cloudflare. This might be my favorite of all of them, given just the AD line, which just continues to power forward, even though we topped back in February. And look at the relative strength here when we topped. It was near a high. It was right at its high relative to the software peers. And then when we pull back and consolidate, we lose a little bit of relative strength. But now that the group is broken out, I really like that volume bar where it went through both moving averages. And I think it's in a bull flag right here. So flagpole, a little bit of a bull flag, break above 80. I think we'll send the stock back toward 95. I'm looking for a nice pre-earnings run here on Cloudflare. So those are the five that I just wanted to give you. Five software stocks: CRNC, RPD, AVLR, DDOG, and NET. All right. Again, want to invite everybody to come join me over at Earnings Beats tomorrow for a webinar. It's Q1 earnings. It's a sneak preview of Q1 earnings. We'll have a link on our website, so come in and check this out tomorrow, or simply subscribe to our free newsletter right here. Just type in your name, your email address, and we'll make sure we get our newsletter out to you. And everybody in the community, including our free newsletter subscribers, will receive an invite for tomorrow's event. So that's probably the best way to make sure that you don't miss the event. And if you can't make it, you can still get a copy of the recording. So it is something that I would certainly consider, even if you can't make it live. All right. It was a pleasure joining you today on your Daily Five. Please remember to go to earningsbeats.com and sign up for that free newsletter. Or if you'd like, take out our no-cost 30-day trial and explore everything that Earnings Beats has to offer. We'd love to have you. Happy trading, everybody.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.